Good evening, everyone. This is James coming from Dividend Stock Talk, where we talk about dividend stocks and investing for weekly and monthly cash flow. Today is December 4th, 2017, and it is 10 p.m. My goodness, where is the year going? All right, let's jump in. Let's just cut through all the BS and just find out what's going on in the stock market today. Now, if you've been following me, you know that we trade 4 different trading strategies. There's dividend capturing, dividends with steroids, double dividends, and dividend investing. Now, the difference between the similarities between all 4 of them is that they all have to do with dividend stocks and trading dividend stocks right around the EX dividend date. The EX dividend date is just before they pay out their dividends. The dividends, nothing more than a part of the profit that goes to the investors. All right, so that being said, let's first take a look at our just plain old dividend investing account, because we trade 4 different accounts, and each one has a different rate of return, basically. I mean, it's not a guaranteed rate of return, but we've been doing this for so long, it's an average. Now, we have two stocks at the moment in our dividend investing. Dividend capturing one, sorry. Dividend capturing. Macy's and SKT. Now, Macy's we bought back in February, and we took it went down quite a bit. 221, which is at the 3rd week of February. We bought it at 33. Right now, the stock is at 25. So we're still a $10,000 loss on Macy's, even though there was a very nice upswing for the last couple of days. So let's quickly take a look at Macy's. Macy's started out the year at a year ago at 42.57. Okay, it didn't take long for it to find the high of the year at 43. Didn't stay there long. Took about a couple of weeks for it to find a trading range of 30, and it traded for 30 right around 5 or 6 months, and then it stair stepped downward from 30 down to about 22, 23. Then it stair-stepped down again to 20, 21 area. Then it made a low of the year just recently at, what is that, 1730, 1729, 1730, somewhere around there. That looks like it was the end of the downturn, because lately she's jumped up to 25.80, which is where she is now. I mean, that is a nice uptrend. But then, you know, it's Christmas time. People associate the Christmas Day parade and the Thanksgiving Day parade with Macy's. And it just so happens that that's just the way it is. Okay? So I'm hoping by the end of the year, we should be a positive or closer to a positive with Macy's and SKT. Because at the end of the year, all these rotate back to 0, and this profit year to date, profit loss year to date, is going to start back at 0 come January 1st. Then we start the whole thing all over again. It's kind of nice to see how the account grows as the year progresses. All right, so here we are with Macy's. She's moving up. Then SKT, let's take a look at that. SKT is at 25.17. SKT started out the year a year ago at 34.86. Took about a month for it to find the high of the year at 37. Now she slowly jumped down to 33, then she dropped down to 32, and then a big drop down to 26. And as she hit 25, and then the low of the year just looks just like Macy's. My goodness, the similarity is unbelievable. Okay, so it hit a low of the year at 21.81, and then jumped back on up to the $25 area, which is where she is now. Now, even with SKT, we got an 8, almost, that's about a $9,000 loss. So between the two of them, it's almost $20,000. So if you add the $20,000 here, actually, yeah, about $19,000, onto the 22 that we already have, we're looking at close to $40,000 profit and loss year to date, which is not bad. That's close to 40% per year. But I can't really count on that because we don't know until it actually happens. because at the end of the year, like I said, it all reverts back to zero. So what we're going to do is we're going to do a couple of trades on this. And the way we do that is go to the market watch. And we like to do 10 days ahead of time for our stocks. Now, we're in the 4th, so 10 days from today is the 18th. And here we go, 10 stocks to choose from. Okay. We got STI Microelectronics, STM, which is Microelectronics, OMC, Omnicom Group, Main Street Capital, Gladstone Land Corporation, Gammon Corporation, Gladstone Commercial Corporation, Gladstone again, Meriden Bancorp, and BlackRock Capital. So out of all of these, you know, you have to find out which is best suited for your investing needs. First thing I want to do is I want to click onto this, and you see I don't want to do anything below 10 cents. So that takes half of them right off the list. So I have 1, 2, 3, 4, 5 to check. Now how are you going to do it? The way I do it is I take it and I put it into the software that I've created. Now, the software I created takes the past performance and weighs it between what it did in the past and the probabilities of what it's going to do in the future. And it's been very successful for us. So what I do, I put it through that, and I also check a few things here because I don't want to fight the trend. And then the trend is the direction in which it's going. And at this moment, SKT, as you can see, it's trending upwards, but kind of sideways too at the same time. You know, sideways and up. But let's go. That was a standard chart. Let's check the seasonality chart. Seasonality chart gives me an idea of where the stock is going to move based on historical performance. Now the red lines represents what it's done in the past over the last 10 years. They went on top of another, top of another, top of another, top of another, to get me an average of what 10 years looks like. Now this blue line represents where we are today. Okay, so I'll highlight that and drag it out a little bit to the end of the year. What we're looking at, we are looking at the next week or so. It's just going to go up, go down, but up, almost like it's basically going to go sideways for the rest of the year. Does that sound like something I want to do? Sure, why not? Well, that's SKT. I don't want SKT anymore because we already have it. We're looking at it. Good, GOD. GOD. And here we are. Now, good. Right here, it looks basically sideways and up. And it's paying a 12-cent dividend, which is not bad. Let's check the regular chart, see what that looks like. Alright, good starts out the year way down at 18. It just slowly goes up, which is the happens to be the low of the year also, 1848. And it takes about 4 months to find the high of the year, which is 23. Now that's not a lot of spread between 18 and 23. It's only like a $5 spread, which if you think about it, it's not bad at all. She drops right back down to that $20 range, tries it up again, back down to 20, back up again. This time she drops down to 21 and back up where she is now. Now she had 3 down days in a row. What does that mean? That means 3 days could make a trend. So do I want to jump into this now? No, I don't. You know, it could be a great company. They could have, you know, the greatest, sweetest, nicest, most loyal people in the world, but 3-day downtrend, and these are big moves too. I mean, look at the size of the movement. All right, she opens up, drops, opens up, big drop. I'm going to wait for it to hit the bottom and then go back up, because you can see the trend here. Let's back it up a little bit. Okay, the trend in the past 6 months, as you can see, it's slowly going up. Okay, but what do you have here? Up, then you have like 6 down days in a row. Okay, comes down, spikes up, sideways, up, and then back down again. This could be doing the exact same thing here. All right, see this movement here? Sideways up, and then big drop down, sideways up, big drop down. So it could be doing the same thing. So I'm going to pass on this one only because I don't like the way the chart looks. Now it's up to you. You know, it's your money. You invest it the way you want. I'm just telling you what I see and what I am going to do. Okay, BlackRock. Now this one is almost almost like a neon sign flash. Now you look at this. For like 9 months of the year, she goes sideways. She trades in a range between 7. Oh wow, can that really be that tight? 713, 780. She goes sideways for like 9 to 10 months, and then all of a sudden, look, she just kept on dropping. So, BlackRock, sorry. KMN, sorry, KAMN. Okay, KMN. All right, she goes sideways. She starts out the year. Starts out the year 49.60. Goes sideways for almost a whole year. Finds the low, 45. Comes right back up to that 49 area. And then after about 10 months traveling in a sideways pattern, she jumps out. Trades for almost a month and a half, close to 2 months at 55, 56 area. Then shoots it up again. Now this is a nice sideways and then an uptrend. Could 3 days in a row, down days. They're not huge down days either. They're just regular, normal, average movement. See, this one almost the same size as that one. This one almost the same size as that one. This one almost the same size as these two. So it's not huge movements on them. Now, 3 down days in a row, I'm going to wait on that one. MAIN, MAIN. Okay, Maine. She starts out right at 36. Goes sideways for a bit. A month and a half, 2 months. Finds the low at 35. Jumps right back up that 36 area for another 2 months. Shoots on up to the 40. A little bit of a pullback, or it could be profit taken, however you want to look at it. And then she's going back up again. But the trend here is almost clear cut and plain to see. Sideways for a little bit, and then almost a nice uptrend. Okay, sideways for a bit. And here we got 4 down days in a row. That's 4 in a row. No thanks, I'm going to pass on that one. OMC, last one on the list for today. Okay, slight down, sideways but downtrend. She comes from the high of the year of 89.71 and slowly comes down, gets stuck here at 73 for about 2 months, and drops to the low of the year, which just happens to be 65.27. From there, a little tiny bit sideways, and then she's going up. And that's a nice movement on the upside. Right now she's at 74.70. This looks like one. It might be good for us. So let's take a look at the seasonality, see what kind of idea we can have for the rest of the year. All right, here's where she is. Here's where we are right now. Sideways, down a little bit, and then back up again. So by the end of the year, we should be out of where we are when we got in. So let's do OMC. OMC. Now, you'll take 40,000 and divide it by. It closed at 74.70. 74. Oops. Divide by 74.7. 535 shares. All right, let's do that. All right, I go to custom buy, drop down to this with preset, and I just change the numbers. Now we wanted 535, right? 535 and 535. Make sure these numbers match. Those are the only ones that are important. Here's my trigger trade right here, and I'm doing it by 2.5%. That's the profit that I'm looking for. So I'm going to add 2.5% to my purchase price, and that will be my sell price. And we're off to the races. Now, that's the only one I wanted to do today. Tomorrow, as you can see, we don't have any on the list. That will pop up tomorrow's list. But till then, we got these three right here. Okay, Macy's, SKT, and OMC. So let's see how she goes. That's that one. Now let's go take a look at our this is our options account. Now, if you don't know much about options, an option is basically the right, but not the obligation. A call option is the right, but not the obligation to buy a stock at a certain price by a certain time. Now, when the stock moves, the options move exponentially. All right, for instance, let's say the stock will go up 10% in value. It goes from 100 to 110, let's say, for the fun of it. An option will go from $1 to $2 or $3 on the same movement. See, the stock moves a little bit, but the options move a lot more because you have less money on the line. However, the bad part about options is they have an expiration date. It's kind of like a gallon of milk. You buy it, you either use it or it goes bad. It's just the way it is. So it's very important, if you're going to get into options, know what you're doing. Now, with higher risk, there's higher reward. Sometimes, now over the past 6 years, I think 2 or 3 times, we've actually broke 3 digits, more than 100% return on our options trading account. But also comes a high risk also, because we lose a lot of money in the option trading account, but we make a lot more. So, it evens out. Now, we actually ended last week in the triple digits, but this week, considering we lost a little bit of money, profit and loss for the year to date, went down $3,000 just about. That brought us back into the 90 area, 97. All right, now we only have 2 positions that we carried over from last week. We really didn't carry over CVS from last week. We actually bought the spread for 2 weeks out because it had a better return. All right, so let's take a look at CVS. CVS. Now, CVS this is basic channel stock. And it goes between, if you're going to buy it at 77 and sell at 80, it's only a $3 move. But look at how many times you could have done it. Like one here, 77, could have bought and it sold and bought and then sold, bought and then sold, bought and then sold, bought and then sold. This one I don't think so. Yep, 77. Yep, bought and then sold, bought. Hit 80. Yep, sold, bought, sold, bought, and then you actually still have it because you. Wait a minute, sold, and bought. Okay, so you would have bought at 70, which is 77. Anyway, you see what I'm saying? This thing's going. It's a classic sideways market. Then all of a sudden, the last couple of weeks, look at this. Or the last couple of months, she just dropped, and then a little bit of recovery, and then dropped again. What is that? 6 down days in a row? 6 down days in a row. It brought us way down to the 68 area. Go sideways for a bit. Then she climbed up 77 and then dropped back down below 72. Now, where are we on this one? We are the 72, 71 and a half, 72. So as long as she stays above 72, we're going to make our money off of this deal. But at this moment in time, she's below 72. So come Friday, we have to decide what we're going to do. We're either going to take delivery or buy 5,000 shares of CVS or take the loss, one or the other. HPQ is the second one we have. And this is one we actually carried over from last week. We didn't do a lot of trades last week because we were in transition. We were actually in the process of moving back down to Florida. To go up to New England in the summer and spring and back down to Florida in the winter time, which is kind of nice. All right, so Hewlett-Packard started out the year at 15. It took her about a couple of weeks to find the low of the year at 14.5. And she jumps up to a trading range of 17 for about a month and a half. Jumps up again to 19. Drops right back down to that 17.5 area for another month or so. And then back up to 19. She's kind of like all over the place. Now all of a sudden into a new trading range of 21. You know, low 21s, high 21s. But that's where she is now. And where are we with our position here? All right, we have 5,000 shares at 21. So we at 21.08. So we're in the money on this one. So we have several choices. Number one, we could, HPQ. All right. Number one is we could sell it just as it is, you know, at 21.08. That's what it closed at. So we could put a sell order in for 21.08 or whatever. As long as it's above 21, we're going to make money off of it. Or what we could do is we could sell someone the option of buying it from us at 21, which is the exact price that we paid for it. And that will bring us in. Let's check. Only $1,200 bucks. But what we're trying to do is we're trying to earn $1,000 a week. Okay, $100,000 account, $1,000 a week is 1% per week. So if we do this trade here, that's $1,200. That's an extra $200. So that surpasses our goal that we're looking for. Okay, so there you have it. Let's check it out in the morning, and we might not get that filled at 28.5 cents. That's pretty good if you think about it. All right, so anyway, all that being said, what do we have to do to trade today? Ooh. Wow, getting a little tired here. All right, today's the 4th. We want to look at the 18th. And real quick, clear the filter. This is what we have for the 18th coming up for the dividend stocks. 10 Monday, 16 Tuesday, 9 Wednesday, 12 Thursday, and just 1 on Friday. Now that's just regular trading stocks. Now I only trade in this account weekly options. So I want to go down here to public and through W and slide down to it says weeklies. And there you have it. So nothing's for Monday. We have STX and TIF. So let's quickly take a look at them. STX. All right. STX is Seagate at 39.20. Starts out the year at 38.50. Goes sideways for about 2 months. Shoots up to find the high of the year, 51.04. Then from that high, she dropped down to 42 maybe. Then slowly declined until you got to the point where it's $30.60. Okay, so from there, it's like a nice shooting star. There you go. To a point, and then she just skyrockets up there and goes sideways. So this is where we are. So the trend on this one is clearly on the uptrend. Let's take a look at the seasonality for this. There we go. And here we are. Oh, this is clear cut, plain to see. There you have it, right there. The next couple of days, this thing's gonna shoot up, and that's what I like to see. So let's go give this one a trade. This is STX. STX. All right, now I want to get to the spreads. And I want to do the vertical spread because it's the simplest and easiest one. You buy it, turn around and sell it. All right, let's get back to the regular chart. There you go. All right. Wow. Keep yawning. My goodness. Oh yeah, she's at 39.20. So we're gonna look at the 38.5, 39, and that is selling for 40 cents. 40 cents just so happens to be a 25% profit. So let's see if we can do some of those. All right, $500 profits, the maximum amount we can make, and it's going to cost us $2,081, and that comes to a grand total of whatever it comes to. All right, that's one we get to do. Let's go back to the market watch. Tiffany's. TIF. All right, Tiffany starts out the year at 82. Quickly finds the bottom of the year at 76. All right, then a couple months later, she finds this trading range. This is a nice trading range between 90 and 95, and she just travels there for 8 months of the year. And she ended up today with 98.64. Not bad. The trend is pretty clear cut. All right, let's see what it looks like for seasonality. All right, seasonality for this. Sideways and then down, so we need to get in and then out within a week. So that means we have to go for one that is a little bit on the reserve side. You know, we can't go for the big dollar move. We just like a 25% one should do it. All right, 95.50, 95.50. Wow, that's a little bit too much. 38. That can't be right. All right, here we go. 94, 94 and a half. We're going to do this one. It's a 25%, and there's a good chance we won't get filled. And there you have it. It makes most we're going to make is $500, and it's going to cost us $2,000, which is right around 25% return. Now, the nice thing about that trade we just put on is 94, 94 and a half. So as long as the stock stays above 94 and a half, then we're going to make our 25% in 4 days. 95, 94 and a half is way down here. So all they got to do is just do business as usual, and they should be good to go. All right, it's just about 10:30. I'm done. I'm going to check and see if I have any questions. If not, I am out of here. Great. I am out of here. I will catch you guys a little bit later on, maybe tomorrow night, and see how we work out. All right, all that being said, this is James from the 10-Minute Trader and Dividend Stock Talk. You have a great day, and I'll see you tomorrow night.